Welcome to this lesson on one of the most powerful wealth building tools in your financial arsenal, the Roth conversion. Hello, I'm Lee Generous. In our previous discussions, we covered the basics of traditional IRAs and 401ks. Today, we're taking it a step further. For high-income earners, standard Roth contributions are often off the table, but the conversion strategy changes the game entirely. In this lesson, we'll explore how you can unlock tax-free growth and distributions regardless of your current income level. We will cover the eligibility rules, the literal mechanics of moving funds, and how to optimize your tax bill for a legacy of tax-free wealth. First, let's address the why. Many of my clients assume that because they exceed the income limit for Roth contributions, the Roth IRA is closed to them. That's a common misconception. While contributions have strict caps, Roth conversions have no income limits whatsoever. Anyone can convert. This means you can move funds from a traditional IRA or a 401k into a Roth IRA, effectively bypassing those contribution hurdles. Whether you earn $100,000 or $100 million, the door to tax-free compounding is wide open through a conversion. Now, how does it actually work? The process is relatively straightforward, but the tax implications are where we need to be precise. You take assets from your pre-tax accounts, such as a traditional IRA, and recharacterize them as Roth assets. It's a fundamental shift in tax status. When you do this, you are effectively taking a distribution that is then immediately reinvested into your Roth IRA. It's a paper transaction with big impact. The amount you convert is treated as taxable income in the year you make the move. This is the entry fee for future tax freedom. Why would you pay taxes now if you don't have to? The answer lies in the math of compounding growth and future tax rates. In a traditional IRA, every dollar of growth is eventually taxed. In a Roth, once you've paid that initial tax, every single cent of growth is yours, tax-free. Another massive benefit: Roth IRAs do not have required minimum distributions or RMDs during your lifetime. This is a legacy game changer. Unlike traditional accounts, you aren't forced to take money out. You can let it grow for your heirs, providing them with a tax-free inheritance. This gives you total control over your retirement income and your estate planning. You decide when and how to use your wealth. When we talk about generational wealth, the Roth IRA is often the centerpiece because of this tax-free transfer capability. It's about more than just your retirement. So, when should you pull the trigger? Timing a conversion is as much an art as it is a science. We look for low tax years or market pullbacks. Converting when asset prices are temporarily lower means you pay less tax on the conversion while positioning more shares for the eventual recovery. One word of caution: the pro rata rule. If you have multiple IRAs, the IRS looks at all of them as one big bucket when calculating taxes on a conversion. You can't just pick the after-tax portion to convert. The IRS requires a proportional calculation across all your traditional SEP and simple IRAs. This is where mistakes happen. Working with a fiduciary advisor to run these numbers before you execute the conversion is absolutely critical. A small calculation error can lead to a surprisingly large tax bill. We ensure the math works in your favor before a single dollar moves. If you decide to move forward, the actual execution is handled between your financial institutions. It's a seamless process once the strategy is set. We handle the paperwork and the coordination. Your focus should stay on the long-term goal, building a more tax-efficient future for your family. In summary, for high-income earners, the Roth conversion is your ticket to the benefits of a Roth IRA that are otherwise unavailable to you. It offers tax-free growth, no required distributions, and a powerful way to pass wealth to the next generation without a tax burden. It requires careful planning and a deep understanding of your current and future tax landscape, but the rewards are well worth the effort. As we often say, it's not just about what you make, it's about what you keep. The Roth conversion is how you keep more of what you've built. Thank you for joining me for this lesson. I hope this has clarified how Roth conversions can fit into your comprehensive wealth plan. In our next lesson, we'll pivot from building tax-free wealth to spending it wisely, tax-efficient withdrawal strategies. I'll see you there. Until then, stay focused on the future. I'm Lee Generous, and this is your path to financial clarity. This video was created using HeyGen, an AI-powered video generation platform, and may feature an AI-generated likeness or voice. The information presented is for educational purposes only and does not constitute personalized tax, legal, or investment advice. Roth conversion strategies involve complex tax considerations that vary based on individual circumstances. You should consult a qualified tax professional or financial advisor before making any decisions. Generous Wealth Management LLC is an investment advisor registered in the states where required. Registration does not imply a certain level of skill or training. Past performance is not indicative of future results. For a copy of our Form ADV Part 2, a disclosure brochure, visit www.genwealthman.com or contact us directly.